Hello and welcome back to this Family Building Society podcast, all about joint borrower sole proprietor mortgages. In this episode, we are going to be talking about the Bank of Mum and Dad, or as it's more commonly known now, the Bank of Family. So I'll go to Paul first. There are a lot of reports of the Bank of Mum and Dad, and why is this such an important part of the UK housing market?
So, I mean, the Bank of Mum and Dad now is probably one of the fifth biggest lenders in the UK. There's a huge amount of wealth stored up in property for older borrowers. You look at what house price changes have been over the last 20, 30, 40 years. I mean, my mum and dad, they bought their first house for sort of £2,500, and it was worth very quickly sort of £300,000, £400,000. And that's in the north of England. Heaven forbid what it's like in the south of England, as we well know. So it is really important to people trying to get on the housing ladder, the first-time buyers trying to get on the housing ladder. Quite often the parents do give them some help, and there's a multitude of ways they can help, and I'm sure Grace can help me cover off some of those.
It interlinks with what we said throughout the other episodes in that intergenerational lending, and it's not just JBSP. You can have family members use the equity in their property and gift in that money if they're not already cash rich and in the position to do that. Or, what works really well with joint borrower sole proprietor, if you haven't got those clients or their parents who have the money to just give over to them as a gift, using their income to support the affordability is a great option. I mean, Mortgage Solutions released an article about first time buyers, and I think the average age is sort of 30, mid-30s. For assisted borrowers, the average household income is 56,000. But I think the average income for those non-assisted first-time buyers is 65,000. It's quite a lot of money. House prices are going up, but the incomes aren't going in line with that. So having the Bank of Family come in and help them is a great solution to that and the housing market, and more lenders are getting on board with that as well.
It is interesting because actually that article you mentioned, the Mortgage Solutions article, was a write-up of the UK Finance Report, which was looking at assisted borrowers and non-assisted borrowers, and first-time buyers who tend to have Bank of Mum and Dad or Bank of Family support. They tend to have a chunkier deposit. Their house prices are the properties they can afford are more expensive compared to those that don't have that support. And that is a criticism of the Bank of Mum and Dad or the Bank of Family, is that not everybody has parents that can give them a very chunky deposit. But Grace, as we've been talking about, joint borrower sole proprietor, it's not all about the deposit, it's also about that affordability aspect. And I think that's really crucial. And we've been talking about the Bank of Mum and Dad, but it's also now more well known as the Bank of Family. So it is wider family members. It may be grandparents or maybe close family members. Do you guys have any cases that you could talk through where you're kind of seeing the Bank of Family assisting more people getting onto the housing ladder?
I've had one where it's brother and sister, and it just literally, one was relatively there was about a 5-year age gap, and one had gone through university and was now a successful lawyer. So her income was quite significant, whereas brother, a little bit younger, not in the same kind of industry, quite a lot lower in income. And because she was still renting, she wanted to keep her first time buyer status, but she wanted to help her brother. And that made quite a big difference, because again, if you're doing the joint borrower sole proprietor and you're a first time buyer and being the one that's helping, you're not putting yourself out of that stamp duty benefit when you come to look for your own home. The fact that she was renting, again, helped from the point of view of she knew she could afford a monthly payment, as well as helping if necessary on the mortgage. So brothers and sisters, mums and dads, aunties and uncles, grannies and granddads, they're all in a position that they can potentially help. And as you say, it's that affordability part of it. Not everybody has that large lump sum of cash. And the fact now that a family have moved to 90%, you have other lenders in this marketplace who are around that kind of level, means that the deposits that they're having to find are very modest. I would just say that, I mean, you're looking at where house prices are going, and there was a report, was it out this week? I'm using the north of England, being up here, I think it was 9.3% house prices had risen in Yorkshire and Humberside over the last 12 months. So significant rises because we're not building enough houses. And the more houses that we can get built and the government can step into and start helping this, the better, because otherwise those house prices potentially can keep on rising.
Yes, it's quite scary sometimes reading those house price reports and places even more importance on this kind of product. Grace, obviously you cover a different area. Do you have any specific cases that come to mind when you're thinking about the wider banker family?
Yeah, absolutely. I was recently discussing a case where it was a first time buyer and she had her father and her auntie that they were exploring the options of what was the best fit. And there was about a 10-year age gap between her dad and her aunt. And based on the income and that we wanted to extend it as long as possible, the better fit was to go down the route of using her aunt there. So I think that's a great example that it's not just the bankered mum and dad anymore. And also this particular client, her aunt didn't have any dependents or children of herself. So she really, was a great advantage that she was able to come on and help there from that affordability perspective.
I think it's like you said, it's widening your thinking or kind of challenging your assumptions. It's this product, some people might think this product only works for parents supporting their children, but actually there is a much wider list of family members, for instance, that can really help, that can, use this product. And you could explore different options, different arrangements, and there are more and one thing that I thought was interesting was that there are more lenders looking at this space. I've mentioned in previous episodes NatWest's family-backed mortgage, and you've got the likes of Gen H who do their income booster and deposit booster products, which is a version of Joint Borrower Sole Proprietor. Family Building Society is synonymous with this intergenerational lending. Do you think more lenders will kind of look at this, be looking to enter this space and are kind of seeing it as a really big opportunity?
I think we just look at the whole space. You've mentioned Gen H, you mentioned NatWest, you look at Skipton Track Record Mortgage, you look at their intergenerational type, their income boost type product, which is similar to Joint Borrower Sole Proprietor. All the lenders are looking at what is the way that we can help people get onto that housing ladder or support them as they move up that housing ladder. Or in our say, we talked about reverse joint borrower, staying in your home in later life. The market has to evolve and gradually, slowly but surely, you're seeing that. And I think it's only a matter of time till you'll see the next stage of this and the next stage after that. As we were talking about the house prices, they're going up. Therefore, there's still going to need to be more help in this area.
Grace, do you have anything to add to that?
Yeah, I mean, there's plenty of clients, that need lenders like ourselves, like Gen H, NatWest, whoever it may be, that has the same goal but different products to fit those needs of those different clients and understanding their story. And I mean, where we set ourselves apart from maybe these other lenders is that term that we can offer them. Lending to age 95 means it's more affordable for them, which Paul mentioned, I think, in an earlier episode. That is the main goal, making it affordable for these clients. And in 5 or 10 years down the line, they may be in a different position financially and actually getting a mortgage for themselves is achievable at that time. But yeah, I think there's some great products out there with all different purposes. So absolutely.
Yes, that segues quite nicely into my next question. Um, some lenders may be looking into this space, but actually, what sets Family Building Society apart? I mean, obviously, it is your USP. It's one of the things you're really well known for. But how will Family Building Society set itself apart and continue to set itself apart in this space?
I think we are constantly evolving, Anna. You think, and I go back to talking about maybe 15 years ago, 10 years ago, 5 years ago, the difference when we brought Joint Borrower Sole Proprietor out first to replace guarantor mortgages effectively. It was at an infancy stage. We moved to extending that to further family members, widening that out, increasing the loan to value to 90%. It's a constant evolvement of the product and the types of products that we have. And you mentioned NatWest a few times. NatWest evolving, Gen H evolving, Skipton evolving. They're all evolving. And certainly from a building society point of view, we recognise that we're here to try and help people onto the housing ladder, stay in their homes, move up the housing ladder. It's what our core kind of belief is as a building society. So promise you, we'll keep looking, we keep evolving, and you'll see new things come out as time goes by.
And I suppose to to wrap up, other things that Family Building Society is really good at, especially in this area, is you've increased up to 90% LTV up to £500,000, 80% LTV up to £750,000, increased loan size of £1 million, and the expansion to wider family members. All points to you guys evolving the proposition and really listening to broker feedback. And is where with those changes, was that in response to broker feedback as well? And is that something you want brokers to input more on and feedback more on that side of things?
Yeah, absolutely. I mean, when having just sort of those day-to-day conversations about these products, it's learning more about what other lenders can offer, but also understanding those client needs. And we are so fortunate that we're in a position to voice those changes and improvements that we want to make to criteria. Um, and, we see them being followed through, and our opinions and thoughts on these changes, their actions. And, it might take some time for the product to adapt even further, but at least we're being heard. So absolutely, we want to take on all brokers' feedback.
Great. So I think that is all we have time for, unfortunately. Thank you so much, Grace and Paul, for taking the time. And if you haven't watched the previous episodes talking about Joint Borrower Sole Proprietor and Reverse Joint Borrower Sole Proprietor, please tune in. The links will be in the story. So thank you so much.